everybody. Happy December. It is crazy to think that we are ending this year and 2023 is kind of almost in the rearview mirror. But hey, thanks for taking the time today. Obviously, whether you're watching this live during the broadcast or if you're catching this on a replay or in case you missed it, we certainly appreciate you taking some time out of your day to join us for what is our last installment of the Flex series for 2023. I think we've had some really good content this year. We're excited about some of the things we got planned for 2024. And even more importantly, I'm excited about our guests today. And we'll get into that in a second. But as always, hopefully this finds you doing well. Everybody's healthy, safe. Obviously, it's that holiday time of season. So there's a lot of traveling coming up, whether they're coming to you or you're going somewhere. So obviously wishing you all safe travels and happy holidays as we close the year out. But to get into it for today's session, I know I say this a lot. I'm excited about all the sessions, but I got a chance to meet these two individuals through Flagstar's FinTech Accelerator program. And I won't bore you with the details of that, but it is a program that we've put together. We've been recognized in many forms and fashions from a trade perspective with our FinTech Accelerator program. And the guys from this company were selected through our last go around of the FinTech applications, nominations. We went through the process and they were one of a handful of companies that got selected. And I got to meet them through the process. Obviously, that accelerator process has completed for that cycle. And we're still doing work with them. And as you can tell, since they're on today, I think what you're going to hear is something very unique in the marketplace today from a perspective of what they bring to the table. And more importantly, what I think it allows you to do from a value add perspective is really grow your market share and grow a book of business in an arena that continues to be one that presents great opportunity in the real estate environment and the real estate market, I should say. But also presents a lot of challenges as well. And these guys are subject matter experts on it, so I'm not going to try to even steal any of their thunder. But before I bring them on stage, the name of the company is Landis. And who we have with us today are both the CEO of Landis and the head growth and operations chief executive of Landis. And if you get a chance to see their bios, I highly encourage you to reach out to them. You'll see that throughout the presentation today. You'll see that they have, an extensive history and depth in the real estate market. They've worked at, places like Credit Karma, Capital One, you name it, risk mitigation, loss mitigation, you name some of the other areas. I know Cyril worked for a real estate firm called Crown Acquisitions, where he led acquisitions and asset management, mergers and acquisitions, you name it. They've kind of been, when you see their background, they've been very heavily involved in the real estate industry. And I think combined what they've built is something that, one, truly benefits a potential homeowner, and then more importantly, benefits the real estate market in general. So with that being said, I'd love to bring out Cyril and Dave, the CEO and Chief Operations Officer of Landis. Hey guys, how you doing?
Great. Thank you very much. Thanks for having us, John. It's always great to talk to anyone that's affiliated with Flagstar. So Dave and I are pretty excited to be here.
Super excited. Thank you very much for having us.
Yeah, the first question I have for you is is there a big green egg behind you guys? Is it a tailgate in the parking in the driveway or something? What do we got going on there?
We coordinate well. A lot of the images that we have are actual images of homes of our clients. And we've got a whole set of stock of them. And somehow we just happen to have the same one today.
That's funny. Well, hey, guys, like I mentioned kind of in the intro for the group, right? I was really excited. Obviously, I mentioned I got a chance to meet you guys, in headquarters and then at the reception afterwards. And I know we've continued dialogue ever since because I really think, as a loan officer, for the individuals watching this, our business partners, right? Any way that you can separate yourself from your competition and create value, whether it be for your borrower, the potential homeowner, whether it be for a real estate agent, a referral source, to me, that's always been the name of this game. And it's more important than ever looking back over the last 12 months and going forward the next 12 months. So I was really excited to have you guys on board because I think what I've seen and what you guys are going to talk about is going to be something of interest to our business partners and those who we do business with. So I'll let you guys kind of get into it and we can go from here.
Yeah, happy to. And, before we start, I would love to say that Flagstar has been amazing to us, and we've already closed some transactions together. And the goal is certainly to help more LOs who are having a really hard time in this current market close on more transactions together. So the entire presentation is going to be about expanding the pool of potential closings for LOs, which is exactly what we do on a daily basis. So let's get into it. The first thing that everyone needs to know about is who are we? What do we do? But before that, it's always why. Like, why do we do what we do? Like, why do we matter? And why have Dave and I chosen to work 100 hours a week on making sure that people reach homeownership? And I think it's because of people. I think when it comes to homeownership, and it's a story of most people in the real estate sector, whether it's an LO, a real estate agent, whomever it is, I think all of us like stories, and we like helping people. We like turning people into smiling people. That's what we do. From misery to happiness is the business that we're all in. And these are the kind of people that we work with. It's college graduates, it's families, it's divorced women. Our clients are anywhere between 18 years old and 80 years old. It's Americans. It's any American. And that's the story of how we created a company that is trying to help more people reach homeownership. And so the basic thing that we do is the people that you're looking at are people who would like to reach homeownership but get blocked at some point. Either because they don't have a perfect FICO score, not enough in down payment, a DTI that's a bit too high, or they started going through the mortgage process, but something fell through at some point. And what we do is we coach them towards getting a mortgage. We buy a home for them that they rent, that they get to stay in on their way to actually repurchasing the home from us later.
Yeah,
that's
Cyril,
a really fundamental point. Yeah,
Cyril, I think that's key for everybody as we're getting into this, right? This is not your typical, hey, your FICO is too low and you don't qualify, and here's how we're going to get your FICO up so that you can qualify, right? You're going to go into it. And I think Dave, when it transitions to Dave, I think he's going to talk about the process and how it works. But, I think for everybody on the phone, you need to understand this is true, like coaching and counseling to get to home ownership. And you're going to see it. Cyril mentioned a second ago, like in a lot of cases, the loans they've closed already, the homes were purchased, the homeowners moved in, they were renters, and then they ended up getting to the point where they were qualified, and qualified not by what I think everybody traditionally knows, like I have a DTI ratio. It's more about the strategy and success of you might qualify, but can you really afford it? And you guys are going to talk about it more, but I think that's key for everybody to understand. This isn't just you're going to refer somebody to me and I'm going to show them how to increase their FICO. That's not what these guys do. They take them from literally, I want to own a home. I know the home I want to buy. I'm going to help you get into it now. And then along the way, I get you into a mortgage, and you guys will see more about it. I don't want to tease you, but I think that's key for everybody to know.
Agreed. So let's talk about a few numbers. In the US every year, there's 700,000 people who get declined on a mortgage application. There are 30 million people who would like to reach homeownership but can't for any reason. Homeownership is the biggest creator of personal wealth in the US. We all know it. And so when you think about homeownership being inaccessible, and that everyone who's trying to apply, especially in this current market with high interest rates, is finding so many hurdles, that's exactly why we exist. For LOs specifically, we remove obstacles along the way. That's what we do, and we expand the pool of potential closings. I will add that it's been a pretty depressing year. When you open any website, any news source, you read stuff like this: Americans cannot afford homes. First-time home buyers are struggling. The decrease in Black homeownership is heartbreaking. wage disparities make it really difficult for millennials to reach homeownership, and so on and so forth. And it's been really somber. It's been really somber. And so what we've really been focused on is how do we look at different problems and how do we come up with solutions? Specifically, let me focus on this chart. This chart starts in 2014 all the way through 2023. The red line is the mortgage rate. Okay, so it went from about 4% up to 8% recently, as we all know. The blue line, turquoise, is the number of home sales. And you see that there's direct correlation between the two, or inverse correlation. And so when interest rates are high, LOs are struggling. Real estate agents are struggling. The entire industry is struggling. And what we've been able to do in tough times, 2022, 2023, is provide ways for LOs, real estate agents, even title insurance companies, anyone who's in the broader industry, a way to keep people in a pipeline and to transition them from I can't reach homeownership to I can now reach homeownership through Landis. So I'm going to pause here for 1 second because I want Dave to tell anyone who's watching right now exactly how we do it.
Thank you, Cyril. So I'm going to take on, and you understand now why we exist, the problems that we're trying to solve. So what do we do? And I'm going to give you the two impacts that we have. First, the client impact, right? The journey starts with you, the loan officer, because you are the one that's able to refer the potential borrower to Landis. You know who's either struggling, who's been declined, who you understand can be helped. So we qualify them for the program. They pick their own home, their dream home, which we purchase, and then they move in. We rent it to them. We coach them. We spend a year, on average 12 to 18 months. Though for our program, it could be 6 months or maybe even a little longer if the client needs it. So it's pretty flexible. And then they buy the house from us and they become the homeowner. That's a client experience. But there's a second impact, which is for you, since you started the process. At step 4, when we buy the house, as a loan officer, the agent that you're working with, that your client is working with, they close on a transaction, an all-cash transaction. That also in that space where most of the properties are FHA, VA loans, that has an absolute advantage. And then the second benefit is at number 6. Because that's that pipeline that we created between step 4 and step 6. We'll do the work. We'll get the client mortgage eligible and ready. We'll get them used to home ownership and the payments that they're making. So they're making their on-time rent payments for 12 months, 18 months. They're good to go when it comes to mortgage payments. And then they become a homeowner. And that's your pipeline getting fulfilled at that point.
Yeah, so Dave, couple things. One, you're going to see at the top right, that Scan Me pop up on several slides. Obviously, that's a QR code, all things Landis, get you, a lot of times when we've talked about this, people are like, well, how do I get in contact with them? There you go. And I think, guys, for the first part of this process, right, Dave hit it right on the head. Like at the end of the day, I want you to stop and think, how many times have you worked with a real estate agent on a referral, or you worked with a borrower and referred them to a real estate agent only to have, and again, insert whatever the reason is why, the loan not close. And that, single mom, the, newlyweds, the people that were renting that are now expecting and their family's growing and they want to move up into that next start, first home versus being a renter. Think about how many times in your career, insert again the reason why, whether it be at the beginning or sometimes at the last minute, unfortunately, that they weren't able to close, and the feeling and how that impacts people's lives. These guys are talking about a completely different path when a scenario like that happens, where they're able to step in and do exactly what they're continuing to talk about. So just trying to set that picture for you as an LO. Think about that. And then to Dave's point, think about okay, well, they didn't qualify for mortgage, but in step 4, the real estate agent still sold the house. Okay, they got a commission, right? Well, they did that because working with you as an LO who sent this borrower to Landis, who traditionally didn't qualify a week ago, now, whatever it is, 2 weeks, 3 weeks, 4 weeks later, the real estate agent's still selling that house. That's because of you working with Landis. And then on top of that, Dave's point about step 6, now you're still involved on the mortgage when it's time to, in essence, the homeowner who's now the renter to take over that property. So it's pretty powerful.
That's exactly right, John. And in fact, I'm going to steal one of the words you used earlier, which resonated a lot with me, which is the word incremental, right? It's that incremental transaction for the realtor. It's the incrementality of that pipeline you're building up. It's in the future, but you have that at step 6. And so thank you. That's it. It's incremental. We want to add value and making the pie a bigger pie for everybody. Let's move on to make it a real example of what that client experience looks like. We talked about the impact that you'll have, and you'll see. But for the client, where we're truly making that difference, I'll give you the example of Leo and Tanya. Names changed, but the image exactly the same. That's them. And before Landis, when they came to us, they had an average FICO score of about 580. They didn't have enough saved up for down payment. Their DTI was too high. A loan officer introduced them to Landis. We qualified them. They picked out a home. They moved in. They were fantastic at engaging with us during the coaching sessions. I'll walk you through in the subsequent slide what we do on coaching. But in 12 months, they were able to repurchase that home. Their FICO score had gone up. They're now in the prime segments. They had saved up enough for down payment. The DTI is much lower. They're mortgage eligible, and they were happy. And that's a client story. But I want to add one thing. So the piece that you don't see behind the picture, Cyril was actually there at their when we purchased the home and they moved in, and the funniest thing, they got into the house, the first joy of being in there, kind of after that settled in. 15 minutes later, Cyril mentioned that he heard them sort of slightly heightened voices. I was like, what's going on? They were starting to argue about the paint that they wanted to use for the bedroom. And he was just taken aback, how are they arguing, right? This should be an exciting moment for them. And then we realized it's because for the first time they were able to plan long term. They were actually making decisions together for more than a year out, which is they'd been renting for so long together, right? And that was the fundamental shift in the journey, right? For them, it's the home enabled them to think long term, to plan long term, and to figure out the differences that they had in furniture and bedroom color tastes. So,
well, and think about this, Dave. If you're a loan officer watching this, they're able to do that because of this process, right? The house was purchased, the house that they wanted to buy. Again, before step 1, there's that point where they weren't eligible for a mortgage and they couldn't get the house. In every other instance, they continue to rent.
Correct.
By getting referred to Landis, now all of a sudden you've qualified them for your program. The house that they wanted to buy, assuming that they qualify, in this instance they did, gets bought. They move into it, and now they see the path to home ownership, that they are going to own the home of their dreams within, I know you guys have said sometimes it's as less as 6 months, sometimes it's been more than 18 months, but that's the part you're going to talk about in a little bit around the coaching and the counseling and the requirements and all that stuff. But guys, think about that as a loan officer. In a lot of instances where it says mortgage eligibility with that check mark of X, that's kind of where your transaction dies. In this example, your borrowers, you think you're going to get more referrals from them going forward? I would say yes. You think your real estate agent that's involved in this transaction is happy because the house still sold? I'm going to say yes. Do you think you're going to be, looked at as a advisor and a value add because you helped them accomplish their goals today and incrementally down the road? Absolutely.
And I'll add one thing real quick, John, which is that we often joke that we're in the smiling business. Going from no to yes is one of the most fundamental things that we do. When you get declined for a mortgage, or an agent tells you, if you don't have a budget of at least X, I won't tour properties with you. That's pretty tough on a family that's trying to move into a new home. And when everyone says no, to potential borrowers. We're actually the entity that says yes to them. We're the entity that goes from, the red X to the green tick, right? And I think that's why LOs love us. It's because we provide an alternative. It's not a perfect yes right away. It's a viable alternative to yes very soon thereafter.
That's right.
Really powerful.
And by the way, the point that you made earlier, John, and so I'm just gonna double down on it a little bit. From the client's perspective, right? You went to Cyril's point, you went from a no to a yes. Guess who the hero is? That's step one. That's you, the loan officer, because the client would not have had an alternative. They would have gone back to renting. And the client moves into a home. They're now in a community. John, I think you mentioned this earlier. If they're happy, they just moved into a home and they have this path to home ownership, they're not sitting quietly on it. They're talking to their neighbors. They're talking to their friends. That creates a lot of positive goodwill in that community itself. So
that's right.
There's a lot of benefits that happen.
That's right. There's a couple questions that came up. I'm not going to go over those yet because I think you're going to address them when we get into the coaching part. It really revolves around step one, and you guys can talk to this way better than I can. How involved can the LO that referred them to you be? And I know there's an LO portal so they can log in and track what's going on and track progress. Because obviously one of the questions is, how can I be involved to make sure that I know what's going on and that obviously I'm working with the borrower that I referred to Landis when they're mortgage eligible. That's one of them. I will answer the other one. Realtors get their normal commission. The real estate transaction of the buying of the house, that's business as usual, right? There's a seller, there's a buyer. In this instance, Landis is the buyer. The negotiation around commissions and all that stuff, that's like any other normal transaction. So Landis really doesn't have anything to do with, per se, the real estate commissions, other than they're entering into the contract and they're going to negotiate, right? But you're not paying the real estate agent, anything like that. It's a normal purchase transaction of a property with real estate agents involved and commissions being paid.
Exactly right. And I'll touch on the engagement model that we have, which makes sure, right, that the mortgage banker is brought along the journey. But I'll tell you even more directly. When you see that QR codes show up, that's actually a link to our portal, and you sign up and you'll actually see a lot of information that's available to you about your clients, the pipeline, the referrals, and then as well the progress each client is making through their journey. But we'll get more on that later. On the next slide, I'm going to touch on this very briefly, but it's to really say two things, right? Firstly, our company, the mission is critical. It's what motivates us. It is what has the mission and the success that we've seen so far has helped us build a solid foundation. It's a large part of the National Association of Realtors, GV, Sequoia, Will Smith, Jay-Z, their social impact arm, have been supporting us on this growth. But the other part of our company and what makes us rounded as we are is almost all of the leadership team here has seen the concerns and the issues with home ownership and the challenges of reaching home ownership for first-time home buyers in our own respective experiences and careers. And so from the smattering, whether it's JP or Credit Karma or Amex, we've all had that same experience as this is a problem, we want to solve it, we're driven by the mission, how can we be more successful? And we keep coming back to the same place, which is we need your help because you are the start of that process. And we'll talk a little bit more about what makes our process rigorous and what sets us up to be successful. And that's going to be on the next slide. So coaching is the difference that we believe our company does. We do it in-house, and we believe that is the accelerator that we need to help someone move from just dreaming of being a homeowner in the rented apartment to actually being a homeowner, right? Moving into that home, following us on the coaching program. And our coaching program has 4 key pillars. First is we need to know what we're doing, which is the financial budgeting and the planning. And that process starts at underwriting. Step 2 in that process was when we underwrite and bring the client into eligibility. it's an eligibility that we have for each client. And so at that stage, we kind of say, hey, this is where you are. This is where mortgage underwriting is going to be in the future. So you're eligible today. Here's your path to being approved or mortgage eligible a year from now. And then we make that prediction of this is the steps you need to take to get to being underwritten down the road. So that's the budgeting. That's the planning that we have. The second is the accountability. We set the plan in motion. We follow up every month with our clients to make sure that they're staying on track, they're following the steps that they're doing. We're there if something out of the ordinary has happened, if they hit a road bump along the way. How do we accommodate? How do we adjust? Right? What do we need to do to compensate? Third is the knowledge. Being a first-time home buyer, what does it take to have a mortgage, to be mortgage eligible? What does a DTI really mean, and why is it so important? Why do I need to pay it down? Right? There's a whole bunch of knowledge that we need to provide. And then these monthly reviews, which is more than just the check-ins. We have a structured 13 goals. It's reported on monthly, and that provides a framework and a consistent experience for every client. Now, how are you as the LO engaged in this process? Well, two ways. One, the client, the coach, and the LO can have joint coaching sessions, right? That's a way for you to stay engaged and in the loop. The other way is we have in our portal the ability for you to track the progress of the client. Like we know that's, from here to there, that's their journey. This is how they're doing. Red, green, yellow, right, on their journey and their progress. And that consistent being part of that journey is what continues to build that trust that started with the referral that happens throughout that journey. So when it comes to now I'm mortgage eligible, where do I make my decision? It's a no-brainer, right? Like you have already built that trust and that engagement.
Yeah, I think that's the key for everybody to hear, right? And I'll take it a step further, right, Dave? And guys, tell me if I'm out of turn here. These guys aren't a lender, right? They don't have a mortgage arm. It's not what they do. They're not affiliated. They're not a subsidiary of some big bank or anything like that. This is what they do. And the referral coming from you, as Dave just mentioned, you have multiple ways to be as involved in this process as you want, all the way up to where you heard Dave say joint coaching sessions, where you're on the coaching session with the potential homeowner and the Landis coach. You have access to the portal. I love the red, yellow, green, right? We all know that, right? We've been ingrained in our brains, stop, caution, full steam ahead. You can see if they're on track or not. But the key to it is, as the referring LO, you have the ability to stay in touch and have access and see exactly how the journey is going for this potential homeowner as they go towards the idea of owning the home outright by themselves and not renting it.
I'll add one thing, which is key in terms of mindset, which is that as an LO, actually, I was just at a conference last week, and I'll quote someone who said this to me. Like, when they send a client to us, they're not handing over a client that became Landis' client. It was always the LO's client and potential borrower, and we help them transition to ownership faster. And the joint coaching call means that it's our collective client, right? It's a Landis client, it's the LO's client all along. And that's really powerful. And to be honest, the LOs that are most successful with us are the ones that are hyper engaged throughout the coaching period, because they really understand what we're doing with the client, and they get to do a more seamless transaction when the client actually repurchases the home later on.
That's absolutely right. And, I'm going to use that to segue into the next slide. And the point that I want to make, building off of what Cyril just said, is as an LO, you actually already do coaching. You already have clients that you're like, hey, listen, if you did X, Y, and Z, and that really is impactful, but that has an impact for like 1 or 2 months. We're just extending the time frame and offering to do the work. It's because it is a slightly longer period, 12 months maybe in some cases. We have the structure, we have the check-ins, the accountability, the planning, then the sharing, the knowledge, and we've gotten some pretty good praise around it. But at the end of the day, we're really just an extension of what you already do, and we want to make sure that you're part of that process, because that is going to be important for the client, but also gives you the comfort in the process of what we're doing and how we're doing it, so you know that the client's progressing well towards mortgage eligibility. Trust, calm, comfortable. Just leave you with that as one of the things that stood out on our coaches. Now, I'm going to pass it back to Cyril to talk through some of the value prop for our clients here.
The word trust is at the core of it, right? So I'm going to do it before and after real quick, because this is what LOs want to hear about. Before Landis, most clients have a landlord who likes their landlord. After Landis, they have financial stability, they have predictability of expenses with a 30-year mortgage. Right now, actually, is a big time during which people don't want to lock in a mortgage. So they come to us, we buy a home for them, they rent it from us, and they wait until interest rates come back down a little bit in order to lock in a mortgage and repurchase the home at that point. Before Landis, a typical client is in rental properties. With Landis, they have access to family-friendly homes. They're not passed down every year, but every 7 or 8 years. They get to build intergenerational wealth through us. And the main thing here is this last part, which is the LO cannot help without Landis. Someone is stuck, cannot get a mortgage, the deal falls through, whatever the reason might be. As an LO, you don't have alternatives. You're stuck. But if you send them to us and they reach homeownership through us, and you get to give them a mortgage at the end of the program, you're a hero. You're an absolute hero. And it doesn't cost you anything, which is pretty insane to think about. I want to spend a second talking about profiles. So for all of you out there who are thinking about some potential clients, potential borrowers that you get to work with, who is this relevant for? Two broad categories. The first one is what we call a deal save. Someone was pre-qualified or even approved, has gone through a process. At any point in time here, something falls through. Their FICO score goes down a little bit. They have a job change. There's a delay in closing. Something is just an issue at some point. We step in. We buy the home, all cash, in 3 weeks. And the client who was supposed to close on that loan moves in as a renter. So we make sure that the property is saved for that client who was already committed to that property but couldn't close for any reason. What's great about this is that most of the time when something falls through, someone else buys the home and then the client has to start from scratch. We avoid that. We typically just assign the contract to us if there's already a contract, by the way. Pretty simple. The second thing is what we call the ineligible bucket. You need to improve your FICO score. You need to improve your assets. You had a bankruptcy, so you need to wait out a period of time. Your DTI is too high. Whatever the reason might be, you just can't close on a mortgage right now because you're not eligible, because an underwriter has told you no. Whatever the situation might be that is preventing you from getting the right mortgage right now, that's a great reason to send us someone. We'll qualify them, and the way that we qualify our clients is not based on right now, right? You have a FICO score of exactly 600 and you need 680 to get the best mortgage you can. And what we'll do is we'll look at their financial profile, their assets, their income, their credit profile, and we'll do an analysis over the evolution of that financial health profile over the next 6, 12, 18, 24 months. And we'll make sure that we coach them on exactly those points for them to get the best mortgage possible with you. That's the part.
It's powerful, right? And what I would tell everybody that sees this, again, whether you're watching it live or you're catching it on a replay, I think everybody's human nature in this industry is an LO. You're going to point to the box as I'm looking at it to the right, which is ineligible, right? Like everybody always thinks about that. Hey, they want to buy a house. They don't qualify. Insert any of those reasons. And you probably list about 15 more in the ineligible. It's the deal save one that struck me when I saw you guys do this presentation, because and look, the LOs, you guys watching this, you know that stuff is real, right? The agencies are pushing back on undisclosed debt. There's all kinds of things that, lenders like us are doing undisclosed debt monitoring on transactions all the way throughout the way. And, again, in the virtual world, raise your hand if you're an LO and at some point in your career, you took an application and between the application and closing, somebody went out and bought a $70,000 car and all of a sudden now they don't qualify. I think it's the first loan I ever did back in 1994 as a retail loan officer. The first one I think was that. And then the second one, here's a good one for you. And you guys could have stepped in this. Literally got a referral from a real estate agent. Remember her name like it was yesterday, Cheryl Genovese in Chadsford, PA at Remax Properties. That's who she was. That was my best real estate referral. Referred me a client. They were moving in from Alabama, husband-wife team. He had just gotten a job at DuPont, which if you know Northeast, they're based out of Delaware. Big wig with, kind of good position with them. Met with him on a Saturday, took an application, was doing a pre-approval for him. And at some point, I got a call from the wife who had flown in town saying, hey, my husband doesn't know this. He's been in Delaware for the last 6 to 9 months. I've racked up $50,000 in credit card debt. We're not going to qualify for that home based off everything you just said. Thanks. I didn't get a deal. My real estate agent didn't sell a property. And I think that ended badly for the husband and wife as far as their relationship goes. But think about it this way. Had this been in place then, and I knew these guys and I worked with them and gave them referrals, I could have sat down with those 2 potential homeowners and my real estate agent and said, look, here's the circumstances. I'm going to refer you here. You're still going to sell the house, assuming the borrowers are eligible based off of your qualifications. And as long as they qualify for Landis, here's what's going to happen. They're going to step in and buy the property. You're going to move in. You're obligated for certain things, coaching, planning, budgeting, accountability. That's your end of the bargain. But their end of the bargain is they're going to hold you accountable to it, and you're going to get in the property you wanted. And then 12 months later, 8 months later, 9 months later, 15 months later, they would have been the actual owners of the home with a mortgage. That's the box that I look at and say is powerful. They're both powerful, don't get me wrong. But I think most people think about credit and they think about eligibility. I go back to, what happens if somebody gets in a contract and God forbid company walks in the next day and you're laid off? It's happening. People are downsizing, right? Like it's things like that that I think are eye-opening when I look at this. So for what it's worth, that's what I would share with the group.
Thank you, John. And just so you know, we do about half and half. We do both, and they both work extremely well. Let's finishing off with this slide, which is join us. Just start working with us. Start expanding your pool of potential borrowers. Start helping more people who can't get a mortgage right now. So the way that it works is you go to ally.landis.com. You create a profile. You get trained on what we do. We assign you a salesperson if you'd like more information. And you can start referring clients. We buy a home for them. You just track them over time. And hopefully you give them a mortgage later on. That's what we do. And it seems to be working. So we're pretty excited about it.
So Cyril, Dave, a couple questions that have come up as well. Talk a little bit about, obviously we're a national lender, right? So this anybody from across the country could be viewing this right now. I guess one of the things come up is this, for your guys' perspective, I think you're only in certain areas right now with obviously growth plans in the future, but talk about that for a minute.
Yeah, we're in the Midwest, the South, the Southeast, and some parts of the Northeast. So from Ohio down to Florida and all the way up on the East Coast as well. So we're not yet on the West Coast, which I know, John, has been a big topic with your team because we'd like to provide the same opportunities to everyone. We're expanding state by state. So, hopefully at some point in 2024, we get to expand to the West Coast a bit more.
Yeah, there you go. And look, I think it starts that way for, every great company started that way, right? Like they don't start I'm in every single state in the country. There's a proof of concept, you build it, you design it, you continue to evolve it, and now look where you're at, right? So I guess for everybody on, kind of think Midwest, East Coast for now, but certainly reach out to them, right? You've seen the Scan Me. Our AEs will have all this documentation, so they'll be able to get you in contact with the guys at Landis, but certainly you have the ability to do that. Dave, there's a couple questions, I think, around when you were talking about the coaching side of the house. I know you mentioned internal. Just can you, without giving away the secret sauce, so to speak, but just kind of give a feel for what that organization with inside Landis looks like as far as how many coaches and all that type of stuff.
Yeah, absolutely. Thanks for asking. There actually, there isn't a secret sauce. It is consistency, it is structure, but it's the accountability because our coaches are diligent and we engage with our clients, whether it's different activities that we have. So let me answer the question. Our coaching, firstly, why we do it in-house is because there are a lot of companies that will coach you on credit, even Credit Karma, right? Like they provide financial advice. There's a fundamental difference, which is advice is generalized, especially when handed out to a set or entire population. Um, for us, it is personalized. We understand your life, your situation. We understand where you are, where you're trying to get to. And not only do we understand that, we draw out a personalized plan for you, and we check in. Our coaches in-house check in with you every month. So we get on a call for 30, 45 minutes to check in on that progress. So the fundamental difference here is when we consistently check in on a structured coaching plan, you are actually a tenant, but you're renting in your chosen dream home. And that's huge. That is the motivation because you're enjoying your home and you know that this staying on track, staying on plan, staying engaged will enable you to continue staying in that home. And that is fundamentally what makes the big difference here.
It's so powerful. The analogy of what you were talking, not the analogy, but the true story of the arguing over the paint, and it's that long-term vision. There's an intrinsic motivation there. That's the house I wanted to buy. I couldn't for whatever reason, but I had an ability to still I'm actually just basically buying it, but deferring the buying of it till I'm eligible, right? In essence, it's what I'm doing. So, okay. One of the other things that came
to your point around the long term, the journey starts for the client with the referral from the LO, but the entire experience is centered around that client. It's about the client and their eligibility for Landis. It's about the client and getting them mortgage eligible down the road. It's the client's journey that's unique to the client. It's the home that the client chose that they're now staying in. It's really all about the client. And the way that we set up our connections, you as the LO, you started the process, you're going to be going along the journey with the client in that client-centric world.
Yeah, I think that's key as you see this, guys. Like they've talked about it, right? With the coaching and the joint coaching and the portal and the access to what you have as the referring LO. It's really designed in such a way that you're there with the homeowner and the borrower every step of the way, right? So it's not designed for this pass off where you just refer it and then at some point down the road you hope that the homeowner remembers you and you referring them to Landis. That's not what these guys have designed. It's designed in a way that keeps you every bit of the way as much as you want involved in understanding the journey and what part of the journey and what phase of the journey the homeowner's on. One of the other questions that came up is for like one of our loan officers at ABC Mortgage, right, wants to, get started with you. Obviously, we're seeing right now how they can do that. Are there any fees or any cost associated to a loan officer for working with Landis and referring homeowners to you?
Absolutely not, and that is fundamental. We don't charge our clients a fee to go through the eligibility process. There's no cost to the loan officer. This is a win-win, right? Where it's incremental to you, it's incremental to the agent. They still get to the question earlier, their normal compensation. And for the client, it's no hit to their credit score to apply either. It's a softball, right? So the entire eligibility check is no impact, no cost. Zero?
Yeah, I'll add one quick thing, which is when you have a very strong ethos and a mission that is so clear, it becomes very easy to make decisions. Some of the decisions that we made along the way have been around, don't try to disrupt everyone's business model. Don't try to catch a few fees here and there from everyone in the industry. The way that we make money is really twofold. One is we charge rent, which is fair market rent, while the client lives in the home. That's rent they would have paid anywhere else anyway. The second thing is when we buy a house for, let's say, $300,000, the client gets to repurchase that house at a 4% premium per annum. So a year later, it's at 312. Okay, so that's how we make money. What I like about this is that we make most of our money on the buy versus sell spread, which means that when the client repurchases the home and their homeowner, they have one and we have one, right? That's how we make money. We don't charge fees to realtors. We don't charge fees to LOs. Everyone in the industry is net similar in terms of money going out, but they're a net winner because a new transaction has occurred thanks to this. And we've made this super clear to everyone. When you transition a renter into a homeowner, everyone wins. The realtor, the LO, title, home builders, everyone in the industry.
Well, and look, for the LOs here, right? One of the things we haven't talked about, I've just putting my LO hat on from back in the day when I originated loans as a retail loan officer. And even so, most of my career is in the TPO space working with retail loan officers, right? It's funny how the more things change, the more they stay the same, right? And they come back around. So one of the things I know I did way back in the 90s was like first-time homebuyer seminars, right? Like trying to, let's fill a room up. It's prospective borrower, it's prospective homeowners for a real estate agent, it's prospective loans for me, blah, 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 blah. Think about that as an LO in the world of, okay, well, now I can introduce, again, in areas where Landis is right now, but expanding all throughout 24, think about what you're able to do in regards to that and reaching out to that community. There was a question about fill in the blanks, where you make money. Cyril, you just answered that, right? It's in the rent because they don't get to live in the house for free, but they'd be renting elsewhere anyway. And then it's in that kind of on the sale of the house with the spread, right? From a standpoint of the appreciation. I don't think I would probably answer this question for you guys. Somebody said, are we able to receive a product guideline, qualification spec sheet, like LTV requirements, all that stuff? I would tell you two things, right? One, you're going to want to reach out to them for that, right? We're not going to go into all that on this call, and they can walk you through that by, kind of any conversation you have with them. But they're no different, right? Like at the end of the day, they're buying the house. The homeowner that wants to buy that house is getting in, and then the journey to get them mortgage eligible. Go look at my product and agency guidelines, right? What our FICO scores are, what our LTVs are, what our products are. Again, Landis is an instrument that takes the borrower and the potential homeowner from, I can't buy the house, deal save ineligibility, gets them in the house, buys the house, gets them in, they're in their dream home, and now they're coaching them to mortgage eligibility. So it's your standard products and guidelines from an agency, Fannie, Freddie, Ginnie perspective. That's what I would tell you is really, I mean, guys, you tell me if I'm wrong, but that's, I think, probably the answer to the question.
That's exactly right.
Yes.
All right, we got one more big question because I think of all the other ones I've gotten, we've touched on them in one form or another. LO wants to know, they start referring business to you. Do they get to meet Will Smith first or Jay-Z first? Which one do they get?
Oh my God, I love it. You wouldn't believe how often we get this question. And actually, I have a funny story for you, which is when we announced that Will Smith and Jay-Z had invested in the company, for about 3-4 weeks after that happened, it was all over the news. We got so many calls in our customer service line where people were like, hey, is Jay in the office today? Or, hey, I've got a call scheduled with my friend Will. Can you put me through, please? And we would answer very honestly, I'm so sorry, Will is not in the office today. I apologize. We can try tomorrow. We're very lucky. We're backed by incredible investors. We're backed by Jay-Z and Will Smith, who are successful people in the entertainment business who have always tried to give back to the community. And they're investors personally in the company. They've been involved. They've done some marketing for us. And it shows that people can trust us. It shows that we're doing the right thing. Because if you try to deal with one of the celebrities with hundreds of millions of followers, you've got a spotlight on you and a deep level of diligence that went on, which is a great thing. The second thing I will add is we also have private equity backing. So we've raised about $220 million to build and start the company, and we're constantly raising more money in order to help more clients. And those investors include, Google, which has a big affordability mandate, also Sequoia Capital, which is a proud investor in companies like LinkedIn and YouTube and Airbnb and Instagram in order to have, as much impact and scale as possible, which is certainly our goal. So we have celebrities, we love them, we're very happy, but the goal is not just to piggyback over those celebrities, it's to do the right thing every single day, help more clients reach homeownership every single day, help more LOs close more deals every single day in order to be more ubiquitous and reach greater scales.
Man, I don't know how a better way to end this session than what you just wrapped it up with and summarized it right there, Cyril. I mean, great session. I love what you guys are doing. Obviously, I got a chance to see it through our accelerator. We've continued to have dialogue even after that, all the way to the point, obviously, you're here now. So, guys, Dave, Cyril, I appreciate you doing this today. And really, thanks for taking the time to get the word out there and kind of what your mission is and what you guys are looking to do.
Thank you so much for having us. It's been an absolute pleasure. Always great chatting with you, John.
Awesome, guys. Hey, if I don't talk to you between now and the holidays, have a good holiday. All right, gang. Hey, I just wrapped this up really quick with a couple things, and then we'll lead into the next one in January. Look, hopefully you see what we're trying to do with this session, right? There is an entire marketplace that has the need, right? In regards to whether it's eligibility or ineligibility, saving deals, whatever the case may be, it fits into those buckets. What a way to continue to grow your pool of buyers and borrowers that you work with. What a great way to continue to establish relationships with real estate agents and or strengthen them, all around the idea of what we're all in this for, right? Is home ownership and helping people achieve their dreams of home ownership and the value that brings to them, both intrinsically and in the ability to create wealth. Because there still is no greater way, in this country, minus, generational or getting lucky and hitting the lottery. There is no better instrument that someone can use to their advantage to grow wealth than home ownership. And it's just a proven fact, right? So a lot of great information there. Obviously, there was a couple ways that you can get in touch with them. We'll make sure you have that info. And I can't say thanks again enough to those guys for doing this today. And then in January, we have Eric Levin from Model Match. He's one of the owners. And what I will focus you on for this session, and you'll see more coming out about it, is a lot is going to be driven around data analytics, not only and in many different ways, right? But using analytical tools in one capacity to maybe be more surgical in your approach in your prospecting efforts, whether it be for borrowers, whether it be for real estate agents, referral sources. Eric has a great, 30, 40-minute presentation that we're going to go through on what you should be doing today to strengthen your chances and to make your prospecting efforts more efficient and more effective, ultimately having a better success rate. And he does it all through data and analytics and where you can find it and how you could be searching for it. So it's a real powerful session. Looking forward to having him on. And look, I'll tell you two things. One, it's the 14th, right? So, by the time some of you may see this, it might be after the holidays, but happy holidays to everybody. I know we got year end coming up. Be safe. Enjoy the time with family and friends and loved ones that you may not have seen in a while. And as always, can't say thank you enough. We appreciate your partnership. At Flagstar, obviously, we know you have choices, and we appreciate being one of those choices, and we know you need to earn your business. So, as always, thanks for the support. We appreciate everything, and happy holidays to everybody.